So Reliance Industries quarterly numbers are flashing on your screen, and by the looks of it, they have come in slightly on the lower side. 18,000 crore odd is the consolidated net profit which has come in, while we were expecting around 24,000 crore. Revenue about 2.19 lakh crore versus estimates of 2.5 lakh crore. So again, revenue is on the lower side, profitability is on the lower side. This is very interesting because the stock went in slightly on the higher side. Today it ended in the gains, but if you look at the last 4-5 days, the stock has been terribly underperforming the market. It appears that the market had a sense that the numbers could be on the softer side. We'll go into the details. Why does it appear to be on the lower side? What may not have contributed in the same way, or the street perhaps was going with a slightly aggressive number because of higher GRMs and expectation that O2C will have a bumper quarter. Sushil Choksi is here. Sushil, 2.2 lakh crore on the revenue front, consolidated EBITDA around 38,000 crore and 18,000 crore on the net profit on the console level. How do you rate this performance?
I think the street, good evening, thanks for having me on the show. The street was going with a little higher estimate on console EBITDA as well as on console PAT. We do not have the breakup of the entire business, but looks like O2C estimates what the street was going on super abnormal margin. We need to see it. The flashes are indicating that margin seems stable quarter on quarter, but compared to the street estimate, it is not meeting the eye. In terms of revenue, they are lower by 25,000 crores compared to what the street was estimating, the reports were estimating, which itself is indicating the number is lower because of that.
Let's go and get some more details, which Soumit has looked into the numbers and the P&L. Soumit, tell us.
Well, what we're understanding from the first cut of the results is that there has been a big miss on the EBITDA front, and that is clearly coming in from the O2C division of the company. Now, analysts were expecting the O2C EBITDA to come in at close to 23,500 crore rupees, but the company has reported an EBITDA of only 19,900 crore rupees. So, clear miss coming in for the O2C business. Now, this could be because of two reasons. Either the company could not fully realize in the benefits of higher Singapore gross refining margin, or there could be some amount of inventory loss that the company might have booked in the first quarter of FY23, because of which there has been a miss on the O2C segment. However, if you see the gas exploration segment, that has reported pretty much in line set of numbers. Analysts were expecting it to be around close to 2,600 crore rupees, but the company has reported around 2,700 crore of EBITDA on the gas exploration side. Also, the retail business numbers are pretty much in line with what the analysts were expecting. 3,900 crore is the number that the analysts were expecting. The company has reported a number of 3,850. Moving on to Reliance Jio, which is the another key division for Reliance Industries, and Reliance Jio numbers are also very much in line with what the street was expecting on all the fronts: revenue, net profit, EBITDA, subscriber addition. In fact, after 3 quarters of continuous subscriber decline, the company has been able to add subscribers around 9.9 million subscriber addition, as that is what the company has seen in the first quarter of FY23. Also, the company's ARPU, Jio's ARPU has increased on a Q-on-Q basis because of some residual benefit of the tariff hike that the company has taken. Just to sum it up, the retail, oil and gas exploration and Jio numbers are pretty much in line with what the street was expecting, but the big miss has come in for the oil to chemical division of Reliance Industries in the first quarter of FY23.